All right, good afternoon, everyone. Welcome. My name is Lauren Williams. I am Adult and Community Services Manager for the Columbia Public Library. Welcome to the first Lunch and Learn of 2021. This program is co-hosted by the library and the League of Women Voters of Columbia, Boone County. Today, we'll be hearing about a very important and a very local topic, the economic impact of COVID-19 in Columbia. And now I'd like to welcome League of Women Voters member Elaine Blodgett to introduce our speakers.
Today's topic is based on the coronavirus and how it's affecting Columbia and Central Missouri, particularly not only health-wise, but economically. Our two speakers are first Alan Spell with the University of Missouri Extension and has two interesting degrees, BS in economics and an MS in landscape architecture. His research focus at this time is on applied industry and regional economic development. He is here to speak about the economic impact of the virus on our economy and then our daily work. Our other speaker is Steve Hollis. He is the Human Services Manager of the Columbia Boone County Department of Public Health and Human Services. That's a long title. I'm sure he has been busy in this exceptional year in his field. He's also been with us before, and we welcome him back to tell us about the effect of the virus on all our citizens. Thank you both for being here to help us understand the ramifications of the pandemic. Our first speaker is Steve Hollis. Welcome.
Thanks so much, Elaine. And as always, glad to be here with the voters in the library, two of our favorite partners. Today I don't really have a formal presentation, to be totally honest. I didn't have time to make one, so I'm gonna wing it here, and I'm happy to take questions. I think we're gonna take those at the end, and I'm assuming folks can throw those in the chat, and somebody will be monitoring those as well. Today, one of the things I mentioned to our host was I don't actually work on the pandemic itself, so my talk will lead, I think, nicely into Alan's talk, which is because I work actually mainly on poverty during the pandemic. So it's really an extension of what I normally do. So I thought it might be helpful for folks to understand the incident command structure that we use. We are operating under an emergency operations plan for Boone County. So I thought I might explain that too, so folks have some context. And then I'll kind of talk about my roles as a part of that. So Boone County has an emergency operations plan that is developed and administered by our emergency operations department at the county. And within that plan, there are multiple essential support functions. And so some of those have been closed as the pandemic has gone on, but some of them are public safety and infrastructure. The three that are primarily operating right now are obviously health and medical. That's essential support function 8. And that the lead agency for health and medical in our community is our department, the Department of Public Health and Human Services, as you might imagine. And then the two that I'm working under are ESF 6, that's Mass Care and Human Services. And then as part of ESF 7 resources, I'm leading donations management. So those are the essential support functions that are operating. Our department, we don't have daily meetings any longer like we used to have with emergency management and all the agencies. Those went on for months and months. And as the pandemic has gone on, the primary essential support function is health and medical. And then we're again operating mass care and human services and donations management as well. I'll start with human services and mass care. This is, as everyone knows, has been a really, really unusual disaster or emergency, if you will. What we're accustomed to are things like tornadoes and floods, things like that. So I've certainly worked on many of those disasters over the years. But typically what happens is with mass care and human services, we come in and we work with providers like Salvation Army and Red Cross to open shelters to make sure people have food and clothing. And really what we tend to do is focus on just meeting basic needs for shelter, clothing, food. And then we quickly convert to long-term recovery. And that long-term recovery typically has 2 or 3 prongs. One of those is the human services side, the other is economic recovery, and then there's an infrastructure aspect. This emergency is different in so many ways. First, it's a glacial pace. Secondly, there aren't the typical there isn't the typical damage, based on like with floods or fires or earthquakes, tornadoes. And the other thing is we have no idea if we're in the emergency or in the long-term recovery. They're kind of concurrent. So we're obviously dealing with the pandemic, but we're also dealing with the economic fallout of the pandemic. And so I've kind of given up on trying to separate things and just we're really just operating strangely in both phases at once, and that is the response and the recovery. And I'm not big on the incident command stuff, but that's language that's very typical in incident command. If folks aren't familiar with incident command, it traditionally was used by police and fire after the September 11th attack. It was really pushed out more nationally as a way to manage all disasters. Everyone's familiar with the communication issues that we experienced during 9/11, and it really was pushed out nationally and then down to the local level to make sure counties are really familiar with and utilizing emergency management. Prior to this pandemic, we've also used the emergency incident command structure for the H1N1 virus outbreak. And the swine flu, if you guys remember those. Those seemed like a big deal at the time, and now they seem like small potatoes, frankly. But it did give us a lot of experience in public health world of using incident command. I don't know if you guys also remember the anthrax scare. A lot of funding came down to public health for incident command and learning and using incident command. So it works really well. One of the things that it does is it puts people in different roles. So you may be a boss in your normal life, and in incident command you may not be, or you may not be a boss and then serve as a boss in incident command. And it's meant to really make sure there's a structure so that folks aren't stepping on each other's toes, and so that we're efficiently using resources. So with all that said, under mass care and human services, mainly what I do is try to convene all the human services providers and try to plan and coordinate together, typically around different issues. So we've worked on a lot of things. One thing that's top of mind for a lot of folks has been homelessness. Everyone's familiar with our stay-at-home orders and the need to isolate and quarantine. We can't do that if you don't have a home. So that has been a big struggle for cities across the country, is how to handle folks experiencing homelessness during the pandemic. Folks may have seen, it's been a struggle, to be honest. We don't have enough shelter to begin with. And then when we're in the middle of a lockdown and the health orders and folks are home, it's really hard to mobilize the staff and resources needed. The resources from the feds were very slow in coming for human services, very, very slow. That's why the donations management became such an important aspect. We organized a group called Como Helps. We wanted to create a one-stop place for people to make donations, and then also a way to convene the local funders so that we were working together to prioritize needs and allocate resources in a collaborative way. And we have formed partnership with the city and the county, already having a very close partnership. And then we traditionally work closely with our United Way, the Heart of Missouri United Way. But we also pulled in the Community Foundation of Central Missouri and the Veterans United Foundation. And so we, I would say for the first 6 to 8 months of the pandemic, we actually met every single day for an hour. We created a single application for nonprofits to apply for funding. And then we would review and discuss those applications together. We would categorize them as, response or recovery, and really prioritized basic needs. So I would say the last 3 months, we met 3 times a week, and we have just converted meeting once a week, We are still seeking donations. They have really dwindled, and that's pretty typical in disasters. And frankly, we've never seen a disaster like this that goes on for 10 months now, 9 months. If folks want to donate, we have a single place to donate at comohelps.org. That's comohelps.org. Those donations can either be made to the Community Foundation or the United Way. They are set up to receive those. But one of the neat things, and I think this is very unusual, is that all 5 funders meet and allocate resources together. So we don't just donate or allocate donations. We also are using, say, county social services funding, children's services funding. The United Way receives some grants to help allocate. Veterans United Foundation is self-funded. The Community Foundation is mainly utilizing donations. And again, those have dwindled. We think we add a lot of value to donations because you have 5 funders who are very familiar with the situation, and they're informed by our work in mass care and human services to identify and prioritize needs. So I feel it's a great way to donate, and donors can know that it's going to priority needs. Having said that, all the nonprofits in our community are struggling. They have lost funding, they've not been able to provide services, and more services are cost reimbursement. So if you have a favorite nonprofit or nonprofits, please, and you have the wherewithal to do so, we're encouraging folks it's fine to donate directly to a nonprofit that you care a lot about. That's great too. Como Helps just as an alternative. If you're not sure, you don't have a nonprofit that you work with a lot, Como Helps is a great option too. Back to the human services side, I started to talk about homelessness. That's been a struggle. We have been providing a lot of support to our homeless shelters and to Turning Point, our drop-in center, and to our street outreach team. In the spring, our goal, because we were not able to add additional homeless shelter capacity, was to simply get people off the streets. Our street outreach team, led by Phoenix Programs, did a great job getting folks into extended stay hotels and then working on a housing plan. We made a lot of progress. We got our numbers down well below 100. We were hovering around 150 unsheltered individuals. Unfortunately, and Alan can talk about this, the economics disproportionately tend to affect, we have this kind of K-shaped recovery or kind of fallout. Our experience has been hourly wage earners have suffered quite a bit, people in the service industry, and also we are seeing, unfortunately, a lot of people new to homelessness. I see a question in the chat about the number of homeless people. That's a broad topic. I don't have that number right now. I wasn't able to sit in our case conferencing on Monday, but we have at least 150 unsheltered folks that we know of. And then I don't know the current sheltered count, but I know our shelters are full. So one of the things we worked on really hard was keep Turning Point, our drop-in center, open so people had a place to go. We provided porta potties and hand washing stations and consulted a lot on safety and moved people through on shifts. We kept the soup kitchen afloat, especially in the spring, by actually purchasing meals from restaurants and food service providers to keep the soup kitchen open. And then one of the biggest challenges that we've had is opening room at the inn. We have been lucky. Room at the inn secured the Eastwood Motel. We have a little bit of isolation and quarantine capacity there, and trying to keep room at the inn afloat. It is tough, really challenging. I often say when we have our meetings with all the providers that the social services providers, in my opinion, are the forgotten first responders. Most of those agencies didn't close. Most of them kept operating. I know, for example, I know 2 people lived at Phoenix Programs to keep their inpatient facility open during the lockdown. They literally lived there for a month. So I don't think our social service providers get enough credit as our forgotten first responders. So I want to give them all a shout out. Another issue that we worked a lot on is feeding kids with the school closures. Really have a lot of praise for Elena Fulham at Columbia Public Schools, who worked incredibly hard to organize the delivered meals through the buses. It was pretty neat because we were able to keep bus drivers employed and food service workers employed, but also get kids fed. We also established a partnership with a new agency in town called Powerhouse, and we use data to drive where to provide evening meals based on concentrations of folks experiencing poverty. So we still have 7 sites. We've actually operated 7 dinner sites throughout the community during the most of the pandemic, and that continues now. We kept those meal programs open over the winter break. We're already planning for spring break, and right now, today, we're talking about the return to Columbia Public Schools, returning to in-person, ensuring that kids that are still at home can get meals. They will still be provided at the school, but some kids can't get to the school. So we're figuring that out. That's a challenge. We tend to try to use data because we have limited resources. So one of the things we'll be doing is looking at the data about kids that are doing online learning who are eligible for free and reduced lunch, and try to map that, not publicly, but try to map it to see where we might target resources to get meals to kids. So those are kind of 2 hot topics. We've worked on a lot of other things. And one of the things we do is really try to monitor state and federal grants and make sure the agencies are aware of those, facilitate getting those dollars in our community. That represents quite a bit of work that we do too. I'm not sure where I am on time. I think I'm pretty close. So I think I'll save a little time because I see lots of questions. So I think I may turn it over to Alan, and then we'll have time for questions.
All right, thank you, Steve. So I'm going to share a screen. I do have a handful of slides that I want to share with you and talk over with you. So I'm going to cover a handful of slides around data that is either from government or private sector sources. Lauren, can you see the slides? Okay,
yes.
Thanks. So I do want to caution that some of these numbers are very preliminary, so they are subject to change, and that's with a lot of the government sources. We have monthly data on employment and stuff, but that information does get revised routinely, and so just want to caveat that, and also to really note with some of these private sector sources that we have now, we're in a unique situation that we haven't had this type of information before in past recessions and past times when we really had a need to look at the economy really quickly. So it's really nice to have some of these new sources, but they also don't have the benchmarking and some of the quality that you would have in federal data sources, for example. So just to say that some of these numbers here are going to be presented, but just know that they can change. So with that, that little bit of setup here, I do want to talk about a few things that's happening in Columbia and just in general in our economy. So the employment in Columbia is about 3% lower than what it was a year ago in November. November is the last month that we have data. So this is right before the holiday season, but we have jobs that were down about 3% from the year before. You can see to the chart on the right, though, we're up from where we were. For a state, we have gained about 60% of those jobs back that we lost earlier in the year in 2020. And really that April was that cliff where the jobs really dropped. And of course, that was a lot of people in restaurant industry and hotel, hospitality, arts, and entertainment. To Steve's point earlier, a lot of these jobs were lower wage jobs and lower pay industries. And that is also what came up faster when we had the reopening of our economy back in late spring and in the early summer. Then we kind of hit a high point in midsummer and then have started dropping back in the fall, but are slowly going up. So we're about 3% below. Now, the reason why we slowed down was a lot to do with consumer behavior. The coronavirus started heating up nationally and then obviously in Missouri as well. And that caused us not to go out to stores as much and shop and not to go to restaurants. And so, that slowed down that employment gain. And that's really kind of where nationally and in the state and in Columbia as well, the easy jobs, if you will, came back quickly, but we're going to have a longer slog as we get through back to hopefully to a normal level and even above that. That could take a while, but it is an improving situation. In Columbia specifically, if we look down that table to the lower left, these are numbers for November as well. They're a little different from the chart numbers, which are seasonally adjusted. But if I want to get details, I have to go to a non-seasonally adjusted number. And you can see that we were at 102,000 back in November of 2019. We're at almost 99,000 in November, down 3,500 jobs. In goods producing, now that's your construction and manufacturing, mainly in Columbia, we're down 300 jobs. That's 3.8%. It's a smaller group of industries there. Construction in general has been doing better recently. We have a shortage of housing just nationally and a lot of places, so construction has started to take off. In Columbia, we have Next Gen Center. We have construction going on in different places. So the construction sector is doing better than other sectors. And manufacturing has been doing better relative. So manufacturing, in this economy, when we're not buying as much services, we're buying instead things for our home improvement, appliances, things like that. That helps manufacturing. And so manufacturing in general has been doing well in terms of their sales and so forth. Manufacturing, when they do increase employment, will increase employment more slowly than other sectors just because they're highly productive industries. In service producing, private service producing, we see we're down, but not down as much as the overall payroll numbers of 3.4%. We're down at 2.2%. So that's your retail and your professional technical services, your headquarters companies and so forth. Actually, retail, if I pulled that out specifically, is actually up about 11% in employment from November 2019. Now, a lot of that's probably going to be taken up by your really big box retailers, like your Walmarts and your Sam's Club and stuff like that. And now, so this information is also for all of Boone County. The MSA actually is the whole county, so that's everywhere. Of course, mostly it's Columbia. And then in government, we see that we're down almost 6%. And government includes local and state government. And actually, Mizzou, for example, is in state government in these indicators. And they're state government's the largest of those that have been down over the month to month. Now, I do want to caution too, this is a monthly number and preliminary figures, and they will be changing. But generally, you can see how that's been working. When we look at the unemployment rate, we have an unemployment rate in November of 3.2%. Missouri's 4.4%. And if you look down at the chart, you can see in gold where Columbia compares to Missouri for this whole year. We've been generally about a point lower in unemployment than the state as a whole. If you look at the right, the map there to the right, you'll see Boone County. You'll see a little bit different number in the unemployment rate because that's the non-seasonally adjusted rate of 2.7% in November. It's seasonally adjusted for the larger numbers, but you can't get county level detail. But you can see basically in mid-Missouri that the lighter color is lower unemployment rates. And so Howard County is the same as Boone, Montauk, Cole, pretty low. We have an economy here in central Missouri, obviously driven a lot by government employment, but also manufacturing and some services. And we're a town that attracts people from the surrounding areas to do shopping and so forth. But the bottom line is that we have a generally pretty low unemployment rate. If you, back when I was going to school for economics, we thought 5% was the natural max that unemployment could get to. Well, now it's at 3%, and this is during a recession. So we are having and experiencing a tight labor market, and you can see that in the need of a lot of businesses actually needing workers right now and having trouble finding them. So it is not a case where there aren't jobs out there. It's just that some of these jobs are going to require skills. A lot of the jobs require some type of training. And so it's not necessarily the case that someone laid off from a restaurant job is actually going to be able to jump into some of these jobs that are available. However, things like warehousing jobs, truck driving jobs, and so forth are jobs that are in high demand, as well as some manufacturing. So there are some opportunities. But there's also something else going on with this unemployment rate as well. So the unemployment rate considers people who are looking for jobs. And so when you think about that, there are people who are not looking for jobs right now. And so that actually lowers the unemployment rate a little bit artificially because they're just exiting the labor force. So you can think about a parent whose child is out of public schools right now, so they have to stay home and take care of their child. They are working less or either stopped working. You can think of people who have, for health reasons, decided not to work. And so those people exit the labor force. And so when the survey comes around every month and asks, are you looking for work? Well, the person may say, no, I'm not even looking for work right now. And so our labor force participation as a whole in the US has declined over the 2020 year. And while we don't have numbers specific for Columbia, you can bet that's actually happening here as well. So we do have people exiting out of the labor force. So while it's low, it is going to bump back up as people, as schools start to reopen, that we can have workers actually entering the labor force as well. The challenge that we have probably isn't the temporary laid off workers, it's the people who've been laid off for 6 months or more. I think nationally that's about 1 in 3 people who are unemployed. And typically after you're laid off over 6 months, that's a dangerous signal for long-term unemployment concern. Those are people who generally have a harder time getting reemployment. This is a different recession than we've ever gone through before, that in our time that we've seen a tremendous drop in jobs that happened in April, more so than during the Great Recession, but then a bump back up really quickly to gain a lot of those jobs back. However, there's still going to be this longer term unemployed people who are going to have a challenge. The Missouri Economic Research and Information Center, MERIC, surveyed employers a few months ago, and their report was out last week. And they asked employers about questions about, are you willing to take people, for example, who've been justice involved before to consider work? In 2019, that number was really high. A lot of employers were willing to consider people who had prior been justice involved. Well, that number shrank this past year because there were just a lot more unemployed people out there. So if you're economically disadvantaged, it's going to be a harder time to find employment sometimes in some of these industries that are now hiring. So now I'm going to switch. Those were government sources that I was talking about. Now I'm going to switch to private sector sources. So one of the sources that we're using a lot now is data from a firm called Womply.com. They track credit card transactions. The site tracktherecovery.org is a Harvard Bill and Melinda Gates funded site that tracks business revenue, business openings, consumer spending across the US, and they actually go down to county level for some counties. Boone actually has county level information, and they track business openings over the period from January to, in this case, the end of December. We can see how Boone County compares to Missouri. Boone County, about 20% of firms are closed according to this data source compared to January. So that's, if you reverse that, 8 and 10 businesses are open, but basically we have 1 in 5 that are closed. Whether that'll be temporary or permanent, we don't know. We obviously hope a lot of that will be temporary. They will reopen. In the state, the census does a weekly business pulse survey, and I think about 3% of firms that were reported in the census survey had reported worrying about being permanently closed in the next few months. So being 20% closed now, probably going to be a lot less of that permanently closed. But as this lingers on, this situation, you obviously worry more about that. The PPP loans that were started back up here just yesterday will hopefully go to help some of these firms continue to survive. And then last data slide is foot traffic. So one of the things that we don't have about Boone County, but we do know for Missouri, is how foot traffic has changed from last year. So compared to December of 2019, foot traffic's down about 14%. If you look over to the table to the right, you can see the different categories for Missouri. Now, I say Missouri, it's not Columbia, but obviously you can see some parallels and probably likely that a lot of these things apply to Columbia as well. We see overall foot traffic down 14%, but not in home improvement. Home improvement stores are up 10%. Grocery stores are down a little bit. And then you can see some of those things. All the way down at the bottom is dining. So we're not going as much to dine in at restaurants. Obviously, restaurants have shifted where they can to deliveries to carry out. And so that's keeping some of those industries going. The thing that we know about this is that we've been doing this now, this e-commerce world that we've shifted a lot to over the past 6 months. We've been doing it for a while now. So we're not going to undo that once the coronavirus recedes and we have our vaccinations. We're still going to use some of those habits that we've learned. We're probably not going to go travel to stores as much as we did before. You can imagine that once we have enough vaccines around and once we feel comfortable doing vacations again, there's going to be a surge of that. That's going to hopefully help a lot of businesses, and that might be later spring, that might be summer. And you can expect that because we actually, as a whole society, have a little bit higher levels of savings than we typically do because we haven't been traveling as much and spending on services. But that boost will be short-lived, and then we'll get back to normal things. And so some of that has impacts for e-commerce. I think Columbia is pretty well positioned because we do have a lot of higher tech industries here. We have a lot of mix of industries. For rural areas in our state, that does offer or present some challenges as we shift more and more to e-commerce, and how those places survive could be a challenge. So lastly, I'll just make a quick pitch for if you are interested in following some of the information that we put out here at the university. We do have a weekly or bi-weekly newsletter that we send out information about just things that are happening in our economy. Our last one, January 4th, was around GDP changes in the state compared to the Midwest. So if you're interested in this kind of stuff, if you're a data wonk, then it's a 2-pager, and we try to keep updated with some information, not specifically about Columbia, but generally about Missouri's economy. So with that, I think that's all I have. I'm happy to take some questions, and I'll stop sharing.
Thank you very much. That was very informative. Thank you, Steve and Alan. I think you answered most of the questions, both of you, as you were going, intentionally or unintentionally. I have a question for Steve, and that is, could you tell us a little bit more about the social impact of COVID and the pandemic in Columbia in terms of suicide, child abuse, health needs, and electricity, heat, rent, car payments? How are people in Columbia doing with regards to that? And that may be a question more for Steve than Alan Spell, but if you both can address that, that would be great.
Sure. Well, of course, we don't have any data yet, so that's a big challenge right now. We just don't really know. Alan, demonstrated one of the challenges. We always have challenges with lags in local data. Obviously, we're seeing some statewide national data. So I will just share anecdotally. Housing needs continue, but they always continue to be our #1 request for services. One of the easiest ways we can see that is through our 211 data. 211 is a number folks can call to get assistance. But that hasn't changed. I just looked at the reports for this fourth quarter of 2020, and rent, utility assistance continue by far to be the biggest request for assistance. And we've had a big emphasis on not just helping folks that are experiencing homelessness, but preventing homelessness. So we've brought down lots of dollars. Some of you may know my colleague, Randy Cole, who manages our CDBG dollars for the city. They've made significant investments in rent assistance and mortgage assistance. They've also done some small business support, micro business support as well. One of the things Como Helps Partners did while we waited on all those federal dollars to come down, which frustratingly took about 7 or 8 months. So somebody had a question about Como Helps. I'll mention that Como Helps allocated over $1.5 million in the last 8 months. That's 5 local funders. Now, not all of that was donations. In fact, the majority was not donations. As a shout out to our community that supports both the county and the city having social services funding, a good chunk of that did come from additional resources, but I would say about a third of it was donations. And so that gives you some idea of the scale of Como Helps. And we did, again, we really focused a lot on basic needs. We provided a lot of support to the food bank as we tried to keep the food bank and the food pantry going, provided a lot of help to Voluntary Action Center to help with rent assistance. That was a big focus. So Barbara, I can only say anecdotally what we see, and then really what we do, because we work so closely and we're so coordinated here in our community around social services, is that the demand that the agencies see then is reflected in their funding requests. And again, we did see a diverse types of requests, but basic needs was a big emphasis. Again, we do have a lot of nonprofits like the businesses that Alan mentioned that are struggling financially. So that is frankly a demand that we can't meet, which is just to simply try to prop up nonprofits. We just don't have the resources for that. We've had really an emphasis on just trying to keep key services going. Mental health, I forgot to mention, and forgive me, if you guys see me present before, I'm normally much more organized, but I'll claim total exhaustion because we've been working 7
we appreciate
9 months.
you
So I
being
appreciate the grace, and there's some great questions and things that I maybe didn't say clearly or kind of glossed over. Mental health, I should have mentioned that one of my team members, Sandy Miller, who's in LCSW, she's one of our social work supervisors, she is the under ESF aid and health and medical for mental health. So Sandy has tirelessly worked to coordinate the mental health providers. We also worked with when Burl and Compass and Phoenix received state dollars for mental health to help prioritize populations in need. The other thing that's been really neat through the county, through the Family Access Center, which is funded by the County Children's Services Fund, and I'm chair of that board, we were able to actually fund 6 clinical appointments for kids and families for people that went through FACE. So those were free, really with an emphasis on, we don't have enough mental health services in the best of times. So we were really emphasizing trying to support better access to mental health services of all types. We won't know about suicide for a while. That data is actually very slow in coming. We certainly hear that and we're very aware of the issue. One of the things that Sandy does too is we try to do some messaging on mental health to the community about how to maintain good mental health and where to go for help. So I think, Barbara, I've covered your question.
Yeah, that helps. We have a few additional questions. One is, what does Powerhouse do, and is it a business or a nonprofit?
Yeah, good question. Powerhouse is a new partner to us. They're actually out of Marshall, Missouri. They're a nonprofit. They have a history in other communities of providing meals. I believe they're again a new partner to us, but I believe they do some reentry work. Where we have partnered with them, we actually haven't provided any funding because the state did do some good things finally, which is say extend SNAP benefits, well as the feds via the state. Also, the feds extended for agencies to access summer feeding, and they also expanded the guidelines that allowed for community-based feeding programs. So Powerhouse in our relationship is helping us with providing food in key areas in Columbia. I think I saw somebody ask about the churches with RADI. Yeah, of course, RADI has mainly been a church-based effort. We have provided more funding over the years to RADI, and this year it's been obviously really challenging for the churches. The Unitarian Church is kind of the congregate site, and then we lease the Eastwood Motel for people of higher medical risk and then isolation and quarantine. The other hard thing is that usually the churches not only provide the church space, but also drivers. So we're having to pay a lot for a driver and a van this year. It's been, the churches have been, the reason we have RADI. It's just been extremely difficult. So we've had to move a lot of resources to RADI this year to essentially substitute for the church volunteers and the church resources. Along those same lines, the soup kitchen, Loaves and Fishes Soup Kitchen, I should have been more clear about that. Loaves and Fishes has long been supported by volunteers, a lot of church groups that feed and serve and feed. What happened during the lockdown was that it was hard for people to volunteer. So during the lockdown, for about 2 months, we worked with restaurants actually to help provide the meals. I'd say Loaves and Fishes, kind of like Turning Point and RADI, we got them hanging on by a thread. Really hopeful we can roll out the vaccine. One of the issues that we have is a lot of people that volunteer their time are older and at risk. So it's been challenging from a volunteer standpoint for a lot of agencies. So yeah, definitely. I didn't mean to shortchange the churches. Those are all faith-based efforts. What I was trying to say is we were trying to help prop those up where needed. So forgive me if I gave that impression.
And for viewers and listeners, RADI is Room at the Inn.
Yes, sorry.
Thanks.
We are still working on a permanent home for Room at the Inn and the Soup Kitchen and Turning Point, but we're making progress. It's a real challenge. Obviously, the pandemic has presented some challenges, but that is a goal.
And it looks like we have a question for probably Alan Spell. It says, with the decrease in foot traffic and the number of closed small businesses, I would have expected a higher unemployment rate. Can this all be explained by the decline in the labor force?
Good question, and it is something that really perplexes us a little bit because we would expect to have higher unemployment rates at this time. I can tell you traditionally Columbia has a low unemployment rate because we are a generally thriving smaller community, and so at any given time, all things equal, Columbia is going to be generally a lower unemployment rate first off. Secondly, even when we looked at 2019, it was a historically low unemployment rate. So the short answer is no, it cannot all be explained by the exit of the labor force. The other thing is that we have this tighter need for labor in certain skilled areas. You can think of construction, skilled trades people are needed there. You can think of manufacturing, specialized workers there, warehousing jobs. But the reality is that you can't just assume that you take people laid off in one sector and that they can automatically start taking jobs in another. There are opportunities there, but there's differences in the flexibility. So for example, a lot of people work in the restaurant industry because of a flexible schedule that allows them to do the other things they do. Sometimes they work multiple jobs. But to then go to a manufacturing facility, for example, you're going to need to work a shift, and there's not that flexibility. So there's structural unemployment that is things that take time to work out, for example. And so you can expect the unemployment rate to probably rise as more people enter back into the labor force. But there's also this big question about the older adults. It's a really big question. We don't know, but there are a lot of people already at that age of retiring or close to it before the pandemic hit. The whole 2010 era, we saw the baby boomers starting to retire. but people were hanging on and working to an older age. And so it wasn't as odd to see somebody working to age 65 or 70 as it might have been 10 years or 20 years before that. However, this pandemic has probably caused people to exit the labor force and not come back. So they decided to retire early and not come back. And that could keep that labor force really tight moving forward. So we'll have to watch that number. But it is generally the case that some employers are really looking for workers and they can't find them. And part of that also is a challenge for people who have a background where they may have been in the justice system before, or have had problems with substance abuse. Most firms now do background and substance checks now, so those things can also be an impediment to getting employment because of those required background and drug testing things that more and more businesses are doing.
And it looks like we're run out of chat questions at the moment, but I have a question that's related. What is the situation with people seeking to increase their education now if they are out of a job? Is that increasing? I know online, do you have any figures related to that? Mothers and fathers who maybe are expanding their education or looking into other areas while they have this downtime?
No, it's a really good question. So the fall of this year, we actually saw not employment, but people lowering the numbers of people going to traditional 4 and 2 year institutions dropped, and especially with community colleges, it really dropped. And a lot of that could be due to the fact that a lot of courses were hands-on at community colleges and you couldn't really do that. And that's really unfortunate because we have a whole lot of middle skilled jobs out there. Matter of fact, that's our largest group of jobs that are needed as middle skills throughout the state. And I think a lot of people during the September, August timeframe thought this was going to be over by the end of the year. So that could have been also playing into it. They thought, well, things will turn around, so why invest in a 1 or 2 years of schooling when I could just go back and get a job? That's one thing. So I have a feeling that the need will increase for getting retraining this year because this did drag on longer. But also the need for flexible training, and I think that's been something that higher education's realized for a number of years, that the world is shifting to more flexible lifelong learning, and a lot of times that's enabled through self-taught online courses and stuff. Well, that got accelerated. That need obviously got accelerated not only in higher education, but as you can see in public education at lower levels as well. So we're not going to unlearn that. We're going to move forward doing that. There's always, though, a challenge with, I don't really worry so much about the younger students and kids. They're really tech enabled now, so they can pick up a lot of these changes over time. They can learn it. But for a lot of adult workers who weren't tech savvy, they're going to continually be disadvantaged moving forward because we're just going to be a more and more tech economy as we move forward. So that just means you're going to have to get skilled up in some of these areas to have some of these job opportunities. And I feel like that's always a challenge when we come out of recession for those individuals who are behind in the digital economy. I think that's going to be even worse as we move forward. So hopefully there will be opportunities to get retraining. And I feel like also we really do need to share that message about the fact that there's training available that's not 4-year always, that's 2-year, even less, that can get you really good jobs, a lot in healthcare, a lot in the skilled trades, that if you're not going to do a traditional college degree, there's definitely plenty of opportunities out there for good jobs with training.
Thank you. We have a few more questions. One is related to the census data. One of Elaine, who introduced you, her husband, was involved in census data at the university, and he wonders about the effect of the pandemic on the official population count in Columbia, Boone County, since at the time of the count, many people were gone from here. And either of you can, or both can take that question.
Well, I'll just throw a little bit out there. Steve may have more knowledge on the, some of the impacts it's going to have for Columbia. I do think that this is going to be an issue, but it's also going to be an issue that Census is aware of, because we're not the only university town, obviously, and so they may go and they may try to account for some of that. They're having to do more and more analysis using other data sources and statistical analysis, so that's a possibility. And a lot more tools than we maybe had. Well, I know that we had in Census 2010. The other thing is that the American Community Survey now is much more heavily used because of the way that the census has changed the questioning. So the towns in Columbia is definitely big enough where we have annual numbers on certain things. That'll play into it as well. So I'm not too worried about that being a long-term concern, but Steve may have a different viewpoint. But.
Yeah, I agree with Alan. The decennial use of the decennial census data from our perspective has become less and less important. It has some real political ramifications, as I'm sure the League of Women Voters members know. It does drive, in my world, what happens is it drives a lot of the federal funding. So for human services, I will tell you that, and if you heard my presentation on poverty data, our poverty rate is artificially inflated by the students. Honestly, that's a good thing for us. It actually gets us more federal money because they don't really differentiate between what we would call acute poverty and generational poverty. So it's a good thing. I'm actually a little worried about that because it could affect what kind of federal funds we get. I do think it would be short term because most of the federal agencies use the ACS to drive it on a kind of an ongoing basis. It's certainly something the city worked really hard on. I know I worked a lot with the nonprofits to try to get folks counted, but the student aspect was a challenge. And we do get because of the change in the way the Census Bureau started capturing that in about 1990, we do have a good chunk of our residents are the students. So it could have an effect. I saw there was a question about PPP loans, and I'll let Alan talk about that, but I think that was from Mari. I do know, Mari knows this, actually a lot of nonprofits access to PPP loans, and that helped a lot. And I do think that our banks were very helpful, to Mari's point. I heard other communities where people had tremendous trouble accessing those. And what I saw was a lot of help. I will say this, the small nonprofits, and then what we saw nationally is people of color are really not connected with traditional banking. We could do a whole presentation on why they've been disenfranchised, some of which was through intentional public policy. But we did see definitely some of that, small grassroots nonprofits, and then very small micro businesses, particularly minority-owned businesses, struggle to access those resources as usual, I'm sad to say. But I'll let Alan talk more about PPP.
No doubt that the PPP did help the unemployment rate for a number of months, but you remember it kind of ended, and before the end of the year, and so a lot of firms that may have used that loan to help support keeping employees at some point just couldn't do it if sales wasn't there. So this second round is supposed to be better targeted toward smaller businesses. Let's hope that's it. That is the case. Having that traditional relationship with a bank is still probably going to be an advantage for a lot of companies, and so I don't think there's any getting around that. But it certainly is a long-term challenge that we do have. And I know there's a question I think I saw about unemployment rate in the African American population. And in best of times and in bad times, the African American unemployment rate, at least at the national level, is always about double what the unemployment rate is for white Americans. So that hasn't changed. I can't remember the exact figure, but I did hear the other day that it was the same case. African Americans nationally were unemployed at about twice the rate. And there will be figures for lower or smaller geographies, but they'll be 6 months or more before we get that. So it is not a challenge that's going to go away. And unfortunately, lower income women and people of color were probably more, well, not probably, were more affected by these job losses because they're working in industries where these jobs were disproportionately hit. So that is a problem that, really is going to be hard to, we're going to have to keep sounding that message, I guess, as we recover, that there really is a two-pronged recovery here. There is certainly a lot of people with higher education, specialized skills who came through this recession in fine shape. No challenges, could work remotely, and are actually having higher savings than what they had before. But there is certainly that group of people who lost jobs, and then these lower wage jobs. You can think of, Columbia is going to be impacted. Think of St. Louis and Kansas City. There's jobs around supporting building security, maintenance, janitorial services, truck driving. A lot of jobs that are don't require a lot of training, but pay good wages, are not going to come back to the same level they were before. So it's going to be a continuing challenge. And also the challenge with state and local government is the balanced budget that they have to maintain. They don't have the ability to deficit spend like the federal government does. So a lot of times in recessions, unfortunately, the impacts to local governments happen a year later because those funds have dried up, and all of a sudden we see less and less money at local and state government. Revenue for state didn't actually drop as much as we thought it would drop, so maybe it won't be as bad. And now with some new money coming from the federal government, maybe that'll help stem some of the losses, but that's something to worry about long-term as well.
Well, looks like we're coming to the end of our time. I want to thank you both, Steve Hollis from the Human Service Manager at the Columbia Boone County Health Department, and Alan Spell from the University of Missouri for this very informative session. And I also want to remind people that coming up next month, February 9th, is our Lunch and Learn on United Way Equity Challenge. That's at noon on Zoom. And then we have, we'll be doing the April election forum for City Council and the School Board on March 16th at 7 p.m. And then we're collaborating with some other organizations focusing on minority youth and the juvenile justice system. That will be February 3rd and February 17th at 7 p.m. Thank you very much for sharing your expertise and your time with us and the viewers.
Thanks for having me. Thank you.
Thank you so much. Appreciate the opportunity.